Welcome back to another video. In today's video, I'll be covering one of the most key concepts that everyone overlook as a beginner trader or mitigate during your early trading career, as I have during my early trading career where made my trading much longer than it needs to be. And if you're still struggling on having an edge but you're still not profitable or not consistently profitable, this might help you out a lot. And this is one of the key light bulb moment I have during my trading career. So in short, what I want to cover today is higher time frame bias, which will formulate your daily bias. And how do you accurately formulate your daily bias is completely based on the higher time frame. Okay? Higher time frame is, in short, is your big picture, and that is your daily bias, and that is your trading compass for the day. Okay? In short, if you don't have a direction at all before you step into the trade, anything that dangle in front of you, you will have some sort of reaction to it. And when you have some sort of reaction to it, it might be right today, it might be wrong tomorrow. So even when you have an edge, for example, now if you think you have an edge and then you start tracking stats and then you are seeing the win rate, but backtesting while doing it live is very, very different. Whenever you're doing this live, you have emotional involved, and whenever you have emotion involved, you need to have a clear compass, a clear direction on where that North Star of the day is going to be at, and that's your target. If you don't have that, wherever it comes to your chart, pop up to your chart, you will be wavered by it, you'll FOMO, and also it will make your psychological edge much, much harder. So a couple of things to cover here. By having a big picture, so higher time frame, which is your daily bias, formulated before you even take a trade. A couple of things that will help you out is one, filter out the noise, to stop you from chasing anything that comes in front of you. So a lot of you, if you're struggling, oh, there's a bullish PD array or bullish market structure, I will just take long today, when you're seeing on the lower time frame. And some of you might be trading on the 5 minutes, 10 minutes, 30 minutes. These are all considered lower time frame. They're not high enough. Okay. So one, that filter out noise. Second is prevent over trading. Right. If you're taking 5-4 trade a day, that's way too much. If you really take a look on every single trade, going back to all the trade you take, looking in the big picture, tell me where is the biggest move, and that is always the expansion move. That's the only move that you should be capturing unless you're scalping. But for beginner trader, scalping is much harder to pick up compared to just do one trade a day. So to me, I only do one trade a day. Majority of the time, I rarely put on 2 trade a day. Majority is only 1 trade a day, one single trade. Because in reality, in one single day, either there's no trade or there's 1 to 2 trade, to be honest. So there's only 1 to 2 trade that you can place in one day. Okay. So this prevents you from over trading. And third is higher win rate. What that means is, if you have a bigger picture, you know the general direction is going to go, your win rate will obviously go up. That is plain and simple. It's just not a guessing game. It's not where if you don't have a direction to go, it's always a toss of a coin. Obviously that win rate is going to be 50-50, even when you have an edge. Okay. And then of course the psychological, which is the emotion, will make you easier and less easy to be wavered from your trend, from your plan. So before you even take a trade, you plan a trade, right? When you plan a trade, you follow and then you trade a plan. This makes you a lot easier to follow, instead of whenever it show up, I need to do this. When it show up, you will constantly be distracted on too many things. There's too many variables in the market already. You need to filter out the noise to have more mental clarity. So by having this will increase your psychological edge, which that'll build confidence. Once you see it over and over and over, and your win rate goes up, you will build confidence to just wait and be patient. There will be less FOMO in your trade, less emotion that you need to hold back because you know where it's going to go. And you just sit and let the trade come to you. And then 30 last points is the risk management. It will be easier. Of course, with the higher time frame, by the time when the price reach a certain key level, or a certain zone or certain PD arrays that you know that is invalidating your trade. That's your stop loss, that's your risk. And then you know where the target want to be. You know where the targets is going to hit, where you want to aim for in the bigger time frame, where the liquidity is sitting. That is your goal. You have the profit set. So once you, before you even put on the trade, you already have some sort of trade in your head where I want the price to come down to this level or go to this level and see how it reacts. And then my risk of taking this is my stop loss is here, my profit is here. I already know my risk and reward. Plain and simple, right? So with all these things, this is why having a big picture with your higher time frame that will form your daily bias is your trading compass and why it's so important. Okay, now let's jump into the top-down analysis, and later I'll go into some live example on my past weeks of trading to show you some top-down analysis I do when I go into my daily bias. I'll formulate my daily bias and before I take any trades. So first thing, as we covered before, is how do we formulate our daily bias? It's higher time frame, plain and simple. Okay, so higher time frame is the key to anything. A lot of new beginner trader are jumping into this point and this point, right? You're jumping into the market structure and the lower time frame, just look for some sort of entry before even understanding the higher time frame. And if you're even looking conservatively, you think you are looking at a higher time frame and you're looking at 1 hour, 3 hours, great. Sorry, 1 hour and 30 minutes, sure. Let's consider higher time frame, but it's not high enough, even for intraday. Okay. For weekly, if you're trading for swing trading, you will be looking at weekly and daily. The reason for it, as we mentioned before, is to filter out a lot of noises in the lower time frame. In the lower time, before you even bother looking at lower time frame, you need to understand where are the key level in the higher time frame is respecting, where it's going, where it's drawing towards, and then you want to see the lower time frame align with the higher time frame. Okay, so kind of jumping into the chart here. So this is 4-hour chart. We can see there is a buy model here, right? First thing I want to formulate is this sell side of the curve. The sell side of the curve, once it breaks this structure over here, right? So these are considered, you call a support or a demand zone. Once it's broken here, this become the resistance, okay? Once it become the resistance, you want to look for trade to enter here. This is during the pre-market. I think this is September 1, so this is a holiday. There's nothing to be trade here, so you can't really place any trade. And then by market times open, it's ready all the way down here, so you can't really place any trade. So there was no trade for me this day since the expansion move already completed. What I want to look for the next day is this. Once there was a swipe of liquidity over here. There was a couple lows, equal lows. Once it gets swept, I want to see if the market will continue going back up, back to this breaker block. All right, so there is a breaker block, and then going back to this to rebalance, at least to rebalance, which it did over here. But during this day, what I want to look for is this. This is the water block. Okay, this is the water block that I'm eyeing for in the 4 hours that I marked it out in the orange box here. And then if you want to look at fair value gap, there's also a fair value gap in the zone between. Okay, over here. And if you're looking for support or resistance, this is a support depending how you view it. So going into here, this is the only key level I want to trade. Okay, I only look for trade once the price pull all the way back down, and then I look for some sort of lower time frame PD arrays, so 5 minutes, 15 minutes. I usually don't even bother looking at 1 minute. The lowest I go is 5 minutes. That's really all you needed. And I place my limit order and my stop down here at this low outside this order block, and my high is target up here, right? Target up here, that's it. Simple. Going into the next day, this is where a lot of new trader will get fake out, where you push it into a high resistance zone where there's just a order block at a moment until it become a breaker once it broke up. But at the current moment, this white box is the order block on this day, and then you also have a key level that is supporting down here. So you have a key level that's supporting down here. it's gonna bounce right in between. It's gonna be choppy, and you can see how the price over here is big, easy to trade, where you have very tight, harder to trade. It's gonna be choppy. So this day, typically you wanna be more careful. If you want to take a trade, it had to be very, very obvious, and the lower time frame had to align with the higher time frame. So in here, the overall market is trying to trend higher, so I will try to look for some sort of long play. So going down here, some sort of OTE, which is around here, and then go up, go back up, right? This is the trade that you could look for, but where else just set up. And the next day, this is the easier trade, where you have the order block become the breaker. Once you have all these candles close above it, market shift, there's a change of character, and once it pull back, there's a fair value gap in the 4 hours, there's a order block, there's a supply become a demand, and then whatever resistance becomes support, right? Depending whatever concept you're trading, this is very, very simple trade. This is simple. This is where you want to look for entry. Once the price trade down here, you go down to lower time frame, and then look for some sort of bullish PD arrays, and then you look for the entry, right? You put your limit order, your stop loss here, your target up here, right? This is the expansion move you want to look for, not this tiny move. You want this hope high, right? So again, to highlight, higher time frame is the key, and then you look for some sort of market structure to confirm the market structure is going. What that means is you want to, this is confirming this is going to the buy side, this is the bullish market structure. You want to look for favor buy. If you want to sell, it had to be very, very clear there's strong resistance for sell, but you want to favor buys because the price will always magnet towards wherever the structure is going to go towards, and then you go down lower time frame. This is the most irrelevant in my eyes. Lower time frame doesn't matter because you can find different PD arrays, and higher time frame, lower time frame doesn't matter. But the whole thing is this need to align with these 2 points. It needs to align with the market structure overall story and the higher time frame overall structure story, right? Once this is all aligned, whatever you put here that aligns with these 2 points, your probability will go up by a lot. So hopefully this is helpful, and then it will help you, give you a little different perspective on how you start looking for into your strategy on how to entering, with a little bit more cautious and a little bit mindful on what you're looking for before just to put on a trade. You should be planning a trade on your higher time frame, and then plan your trade and just put in a limit order or some sort of entry zone that you want to expect the price to react. Those are where you should be placing your order. If the price never even trades down to that level, then you don't take a trade. It's that simple. Okay, now we can jump to the live chart. Okay, jumping into live charting here for NQ. So I quickly go over some of the trade I took. So this is going back to late August, and I'll go all the way to around early September on what I was looking for. So currently, let me use arrow. So uptrend, right? And once there is some sort of market structure shift, so over here, there is a market structure shift all the way down here. When you have sliced through all this, you want to look for this you want to favor towards the downside. So this is the sell side market structure. Okay, this is the sell model. Buy model is completed. Now it's going to sell model. One thing going to here you want to see is in the 4 hour. So I'm looking again in the 4 hour chart. In here on this day, I only want to take sell order. Once you push down here, going and retrace into here as a key zone, going down to 30 minutes. This is where I want to look for trade in this zone. So you can see there is 30 minutes point of interest. Easy trading day. This is one of the most easy trading day I had while I was traveling. Even you see, this is where a lot of trader will think there is equal high up here. Even there's the equal high up here, the price has to grab this equal high. That is not true. When you have strong alignment with higher time frame and lower time frame, the price has to grab this equal high. That is not true. When you have strong alignment with higher time frame and lower time frame, the price has to grab this equal high. That is not true. When you have strong there's no reason for the price to retrace, right? So this is the point to OT. Here we go. So going down here into 5 minutes, jumps into 5 minutes. This is the zone I want to look into. This is the point of interest. It even trades past the OT zone, but that's okay. I don't want to look for any trade unless it's near my point of interest, which is my 30 minutes and my forward time frame, which there's a crossover over here. And then if I take a look to the left, there is rel equal high for internal, right? So if I go down to 15 minutes, this is a rel equal high I want to take a look at, where it trade into the zone where I will expect it to reject, right? On this day, put a limit order up here at this high. I didn't pull it up here. Sometime might not retrace all the way up here, even this is the higher time frame, but this is the zone I'm looking for. Out here, stop 40 points, and then target 2R, right? And then the rest at the low. This is a 4-point RR trade, 4.4 RR trade. This is as straightforward as get. And you can see, when you can read the price action of a higher time frame accurate, you have so much conviction that you don't need to be afraid of just putting a limit order, let it sit. A lot of trader will, okay, let me wait for confirmation, and they enter it up here, sure. But when you become trading low enough, you should reach the point where you know where today market structure will be, and then you just set your limit order, right? I trade all my entry as limit order. I don't ever put it as a market order, because limit order will always give you a better feel. It'll always give you feel near the end. And sometimes even if I'm wrong, sure, I'm wrong. I'm not 100% always right where I'm going to get near the end of the wick of that whole move. But at least it will not, majority of the time, it will not go outside my stop loss, right? It might retrace all the way close to my stop loss, but that essentially just invalidates my theory. Whatever my plan I have for hypothesis for today, that means I'm wrong, right? If it invalidated, I'm wrong. That's it. So this is one entry that I took, and going forward, right, into the next day, this is where it becomes very interesting. So you can see this market structure is going down here, and this order block on the 4-hour time frame becomes your breaker block. Where it is, so this is my breaker block. So what I want to look for is price retracing down to here or continuation upwards. Okay, so on this day, this is the day on Monday, going down 30 minutes. Again, breaker block, where is their key level? Okay, and then there's key level over here, order block, equal lows. And usually breaker block is one of my favorite strategy to trade, because they're so strong, even though they're typically used once. Once you tap into it, that's it. You don't really use it anymore. But usually when you have a breakout that's strong, it will always tap out the breaker block and respect it. So on this day, same thing. Order at equal low, getting swept, and then target all the way up here. And then my stop is outside this key level over here. I don't expect it to go out. So this is exactly a 2-hour trade, a little bit like 2.5, but this is a 2-hour trade, and that's it. And then I will show you why I mean is only relevant for one day. So going into this breaker block, typically I just ignore going forward. It's not as strong anymore, and kind of can read into it in a separate video. But this day is what I leverage as my new PD array on a higher time frame. So we can obviously, this is holding on this day. Very high likely in the next day, this will continue to hold. If there is some sort of bullish PD array, which there is PD array form on this day. On Tuesday, once this is formed for this order block over here, and now it's going towards the buy side of the curve. Let me do this. Now this is going toward buy side of the curve. It will at least retrace to OTE right up here, right? So for me, it makes sense for me to take a trade down here. So going down to 30 minutes, and you can see how I'm not even going to 5 minutes or even anything lower. From just using 4 hours, you can know where is the general direction, and then even if you just place a trade here, right? So we can literally just place a trade at this word block and leave it and target 2RR. Oh, there's more than 2R already. So you can see this tap in the zone, go straight up. You don't even need to go to lower time frame. So start really thinking about this in your trading. If I'm making my trading in the higher time frame much simpler, much less noise, reduce number of a trade, there's equal less headache, right? Now in trading into the OTE zone, this is where I want to be very careful. This is where there is a order block up here on the buy side. You see how they react to it on this day. Once I see this reaction, I can confirm there will be lower. There will be high chance of going lower, also slicing through this. This is lower, right? It will go lower on this day, on the next day. And you can see here, this is formulating essentially a new market structure. This is the sell side, the buy side, sorry. Now it's formulating the sell side, okay? And on this day, there's one trade I took on this day, which I will highlight. Once you slice through all this, there was really no key zone. What I was eyeing over here was this 4 hour to retrace up here into this water block. But if you take a look at 30 minutes, there's nothing. This is way up here. And then when the price open is already near down here, there's no way price will retrace this deep. And during this time, what you can take a look is 30 minutes. There is a water block. So literally this day, another easy trading day. Limit water here, stop down here, target 2RR, and then this low. This is a 3RR trade. Easy trade on this day as well. This is just plain and simple, right? This is the risk and higher win rate that you can increase within your trade just by looking at 4 hours, 30 minutes, 1 hour, but minimum 4 hours, right? All I'm leveraging is 4 hour over here. And same thing, this is going back to our previous example. There's a water block, and then once there's a market structure shift in the higher time frame, what I want to look for, so let me erase this. I want to look for potentially shift into a buy side model. This over here, swept all this low. I want to see some sort of market structure shift. Okay, so on this day, OTE over here. Limit order from here to this low, target high, right? That simple. Same thing, next day, and I'll kind of just go over this quickly. As you can see, this is respecting the bearish water block up here. It's refusing breakout. And as we discussed on this day, right, previous, this now becomes the buy side. Now we get confirmation. Once this breakout, this is the buy side model, right? This becomes the buy side model, right? Buy side model, sell side model. Oops. Going down to 30 minutes on this day, where I say this is the tighter range where you need to make sure what you're trading. Over here, 30 minutes. The block, internal low to internal high. You can trade, but this day, I vividly remember it never came to OTE. So my limit order was sitting over here, but it never got hit. So no trade on this day, which is fine. And like I said, if it doesn't hit your plan, if the trade doesn't go to your plan, you don't take the trade, and then you should be okay on missing out, right? And same thing on this day, continue for will retrace down, and this is what we're looking for. Going down to lower time frame, same thing, OTE, and then your long entry at this box. Stop at this low, and then you target a high. This day, the high didn't hit until the next day, so I think around pre-market that's when it hit, if I remember correctly. Yeah. So near the open, this is where this was hit. So this kind of give you an idea, just going through roughly half a month. You can see, leveraging higher time frame, you can really see how it flows, right? And let me kind of clear out everything for you and kind of map out, since we already went through all of them. You can see over here, once it's shifted, this become a breaker. Oops. This become a breaker for future use, right? This is a order block for these days. Respected. Once it breaks, this is the sell side now. Sell side of the curve. Let me change kind of different color. So sell side, you can see respected, right? Grab the liquidity down here. Once this is grabbed, shift momentum upwards. This section becomes breaker, right? All these becomes a breaker block, right? This is all become breaker, respected. Okay, and then within here, there's also a order block. So this is the order block. You can see also it's respecting it. And once it broke through over here, this is where you want to look to the left side on where it's breaking out and where it's going to be the key level. So you can see again, order block. And at this high, this is the key high. That's the order block. As we mentioned, respected, switch to market structure. Once it break out, this become a breaker. Once a breaker, this definitely confirm this is the new continuation to go upwards, right? And then we kind of can continue looking down. September, you can see breaking new high, right? But this is very plain that once it's broken, this is broken, key support. This has become key order block support, key order block support, right? Key order, even though this never trade as low, since this has strong momentum going upwards, just going straight to the high, this is fine. But you can see these are days why you should only look for trade to go long. Okay. All right, so this kind of wrap up for today's video to showcase you just leveraging the 4-hour chart. You don't even, and just play bigger moves. It give you a lot of headache, get rid of a lot of headache for you. If you imagine looking down to, 1 minute. Let's say you want to take all these entry over here. These are so much noise that you're looking through. Oh, there's a market structure shift. I go short, but never reach my key level. It reverse on me, break even, sure, right? And let's say, oh, it's down here. Let me continue take a short here, since there's another market structure shift, but it already entered a key zone, right? Let's say this is the order block I'm looking for. This is 1 minute I'm looking at. I enter here, short, right? Target down here, QR. Oh, it's respecting. Oh, I got stopped out. Why is that? Because you're not looking at higher time frame. Okay, looking at lower time frame of 1 minute, 2 minutes. I would suggest one thing to you, coming from personal experience, is go up to minimum 1 hour, 30 minutes. I would say start from 4 hours. Before you even start a day, look for 4 hours. And then usually before the whole week open, I always look at the daily, right? To see where is overall the market is structure is trending to know we're in the buy side or the sell side. If you know if you're in the right side of the curve when you trade that in lower time frame, it's easier because the price will be less resistance running towards that direction. There's always have more resistance going against it. Okay, put that into your perspective and then apply it into trading. Hopefully this helps. Stay safe and happy trading.